Good morning, everyone. Welcome to Tuesday morning. Another day, another live stream, another crazy back and forth market. What the heck? Right at the market open at 6 p.m. yesterday, we just went to the previous week high. It was insane. We did take a little long. I did when I saw the market move in. I was like, maybe I can make a little bit of money. So I took, single micro contracts. Nothing crazy, but we had a good time. Well, we're going to be taking a look at the market here this morning. If you're here for the first time, welcome. Really glad that you're here this morning. We're going to be helping navigate you through the wild world of trading futures. We're going to be talking about ICT concepts, order blocks. We're going to be talking about models and strategies. We're going to be talking about order flow, all that good stuff. So stick around, hit the like button, subscribe. If you have any questions, put them in the comments or put them in the chat, and I'd be happy to chat and answer any questions you have. Additionally, if you're looking to take your trading to the next level meaning I want to add risk, but I don't want to blow up my personal accounts. The best way is to use evaluation accounts from prop firms. And so I have a discount code DTJ, and you can see on the screen there 3 of the 4 that I support: Take Profit Trader, Apex, and Tradeify. And the other one that you can find down in the description is Funded Next Futures. And you will get anywhere from 5, 30 to 80% off your evaluation account. So imagine spending $30 and being able to take dozens and dozens and dozens of trades trying to learn and master your craft, compared to taking one trade on your personal account and losing $30 or $50 or $100. Who knows? The risk is significantly less, and I recommend that being your step 2 of becoming profitable. Step 1, start with a demo account, master a strategy, figure out the strategy you want to use, become consistent applying it, and then add risk using a prop firm. And you can use those codes below. With that, let's go ahead, open in prayer, and then we will get started here this morning. Father, we honor you this morning. We thank you for your faithfulness. Thank you for your kindness and goodness. Lord, I thank you that every day is a day that we can show up and be consistent, that we can show our faithfulness to you by applying the principles of the kingdom to our daily lives. And as we are faithful, you show yourself faithful to us by giving us more responsibility. So Father, I pray today that we would be good stewards of your resources, good stewards of the money that you've given us. Father, I pray blessing over every person here, that they would see increase in their personal relationship with you, Lord, and that they would grow in their knowledge and understanding of the market. Lord, we honor you in Jesus' name. And everyone said, amen, amen. Good morning, folks. Glad to have you here this morning. We're going to go ahead and jump right into it. We'll say hi here: Matthew, John, Jose, Maria, Shane. Good morning, Matthew. Waterfowl, good morning. Jay, what's up? Wendy, how are you? Lawrence, good morning. Shane, Adam, Dipraja. I am so sorry, my friend. Daniel, prayer warrior, how you doing? All right, so go ahead, hit the like button, and we're gonna rock and roll here this morning. I did mention that I was going to trade ES today. I might change my mind, and here's why. As we take a look at the market, you're going to see that during the Asia and overnight session, we had an explosive move higher, okay? When we get explosive moves higher, it's very, very common to see lots of choppy price action to follow, consolidation. And I'm not sure I want to do that in ES. It's less volatile, so we're going to watch it closely. And if I see an opportunity, we'll switch. So I'm gonna get everything set up today to be able to trade on the Nasdaq or switch over quickly to ES. So I apologize in advance if you're watching and you're like, which one is he taking a trade on? I'm just trying to keep my word to focus on an asset that just to diversify, because I know I need to diversify a little. I've gotten a little comfortable with the Nasdaq, but that comfortability also has hurt me because I'll see a clean setup on ES and still take it on the Nasdaq and it's too choppy or it doesn't move nearly as much. So with that in mind, let's take a look. By the way, my son imagined that as soon as he gave me the gift, so yesterday was my birthday, he gave me a gift and he had this picture that I was going to share it on stream, and that's exactly what I'm doing. He gave me the best dad ever tumbler. And that's not the best part. The best part is the back. The back has these nutrient facts. Let's see if you can cover it right there. So you can see the nutrient facts: strength, guidance, humor, hardworking, and then on the other side it tells you the percentage. This is one amazing father. Right there it says 50%. One of those was his humor, 50%. And then it has an asterisk right there. The asterisk said, contains significant amounts of dad jokes. Yeah, that was fun. So I don't know if they're dad jokes. I just goofy with my kids, and I think that's what dad jokes have turned into. Just being goofy with your kids, not caring what your kids think when you try to make a joke. Because that's definitely me. They laugh. They do. One day they won't laugh. I can guarantee you that. One day they won't. They'll roll their eyes. Dad, stop it. Okay. Let's pop up to the daily. Here we go. So from a daily perspective, yesterday, completely bullish. Isn't that insane? In light of news, war, insane. Now that we have signs of peace, isn't that crazy? Trump bombs on a Saturday, news comes out on Monday, and on Tuesday, it sounds like we might have a peace treaty between Israel and Iran. I don't. John, the only one I will, so it will be gold. So if I have a master plan, the master plan is to expand into ES and gold. Those would be the two, the indices and metals that I would look into expanding into trading. So we have swept the high and we got highs up here. Are we completely bullish? Yes. I think the answer is yes. Are we going to potentially retrace? Yeah, I think so. I just don't know how much and I don't know when. So from a 4-hour perspective, we got this 4-hour fair value gap. This is the overnight 4-hour fair value gap that I would like to see price drop into. From a 1-hour perspective, this hourly fair value gap is what's holding price up right now. You can see the candles, the bodies have stayed in premium. The wicks have reached down into discount, but that's allowable for sure. So either we have this slow slide and we close, or we continue to have support and we see a move towards London high. $30-minute, we got an order block here, and I won't call that an order block. I'll just call that a mitigation block. a low, high, higher low. Tapped it. Mitigation. Mitigation is very similar to a breaker, just not as reliable, I would say. Dropping down to the 15-minute, we have this 15-minute fair value gap. So if we want to further refine our hourly BISI, we would refine it with a 15-minute fair value gap. And that would be, see how they conveniently, the midpoints overlap? That tells me that this is a significant. Meaning it's a prominent fair value gap that the algorithm is referring to. We can drop further down to the 5-minute, and it wouldn't surprise me if we have a 5-minute that's overlapping conveniently. In this case, we have two fair value gaps, 5-minute fair value gaps, but we'll just mark the lower one. So we're gonna have a lot of colors right here, but I'm doing this on purpose. We'll bring this lower for right now. I've already marked out London high. London low's already been ran. I have our new day opening gap already marked out. It's a very, our opening range gap. It's gonna be a very large one. Closing price from yesterday was at 22,076, and we're at 287, so it's over 200 points right now. ICT mentions that when we have that large of an opening range gap, it's not uncommon to see it stay unfilled. So meaning we could see some bullish price action as a result of it. We'll see. One minute, 15 seconds, discount. We are gonna take this, I think. We'll see if it gives it to us here. There it is, nice. Got 17 handles out of that. And unfortunately, I don't think that was copied on any of my accounts. That stinks. All right, so now that we have opening price, let's go ahead and mark out our levels here. We need to mark midnight open also. Midnight open hasn't been tagged. So more than likely, I would like to see midnight open tagged to some degree. I expect it to be tagged. But also, we're gonna sit on our hands a little bit, I think, and let the market kind of figure out what it wants to do. We're in consolidation here. We're inside that hourly, 15-minute, and 5-minute BISIs, excuse me. While we're waiting, we'll go ahead and mark up ES here. ES is much closer to midnight open. There really isn't a new day opening gap worth marking. I think that's pretty irrelevant. See the large candles, how they're overlapping with each other right off the open? That's what we want to stay away from, okay? Jose, bias today. Why is gold falling? Probably because there's peace and less chance of war. That would be my guess. All right, so we have a small breaker here, high, low, higher, high. Price could come into this level here, and you could see it expand down to midnight open. We swept and created equal highs here. I think we might have swept it by a tick. Yep. So we'll see how this plays out here. Not interested in it. I can find something that has a better quality, better setup. I still think it's a legitimate play. To the downside, we got low resistance liquidity. Opening range is here, midpoint. But we need to see the bodies give us a little more than that. ES doesn't look any better. ES is really consolidating in this range here. So we're sitting waiting. We got news at 10. Let's check out what that news is. Tuesday, what do we got? We got Fed Chair Powell testifies at 10 a.m. That's not fun. I think that's going to blow up our morning. Especially if he's testifying for a period of time. We're just going to have to be very careful and cautious. You know, there's a running joke in the trading community that ICT traders go, no trading on Monday because there's no news. No trading on Tuesday, no news. No trading on Wednesday because it's CPI, too volatile. So we want to wait for confirmation on the setup for Thursday's trade. So we're going to trade Thursday, and that's all we're trading this week. Yeah, I just took the 930 model, got a little bit off of that. I wish that was copied on my accounts, but I was on the wrong account to copy, so it did not get copied. I don't want nothing to do with this, okay? Be content by not trading. It's the hardest thing, but we need to be content by not taking a trade. Johnny, that is in the Discord, or excuse me, it's in the Purpose Driven Trader Academy, and yes, it's there. It's the only model as of right now that I don't share publicly. I leave just for those that have chosen to be a part of the community. I would say it works. When I've back tested it, it works 70% of the time. But I would probably say it feels more like 60. And it's not designed to go heavy either. The way I would call it, okay, so there's a train of thought out there that talks about how there's two types of trades. There's small trades that build your buffer so that you can take larger trades with a little more risk, a little more freedom. And then you have your larger trades that are your primary trade that you're looking to make your money off of. So some of these trades that you can take, these small scalp trades, are to build your buffer. So let's just say you build a buffer of $100 and you have a max daily loss of $200. Well, that gives you a $300 spread for a potential stop loss. So the idea behind these small scalp trades is to build some cushion so that you can take a bigger trade and give it room to breathe. That's how I view the 930 model. The 930 model is there to give you some cushion. Sometimes it doesn't. It takes away your cushion when it's wrong, but when it works, it gives you that nice cushion to be able to take your primary trade in the trading day. That's how I would view it. And it scratches the itch for those that want to take a trade. I feel like this could be hotter. So ES has given us a fair value gap. It's given us two fair value gaps. While the Nasdaq has not given us one. I noticed you take other trades off stream at different times. I'm trying to think. I mean, I take trades throughout the entire day. The trades that I teach, all of the trades that I break down, the only ones that I need to do a deeper dive inside of the course is the 30-minute reversal. That's probably the only one that I'm planning on doing, that I need to put a deeper dive into it. But all of everything that I teach will go inside the Discord. But I would say, while the models, yeah, you can. Let me give you an example. There's a trader out there that I respect, and this person shared a model, a trading model, and I took a look at it, and they talked about the win rate being 60-70%. I'm like, oh, this is great. Let's take a look. That model is almost irrelevant. I'm going to have to pause here for a second. I have somebody working on my AC unit. That model is almost irrelevant unless you understand order flow. And primarily what I teach in the Discord, or what I teach in the Academy, is how to read order flow. Okay? Once you can read order flow, give me a second, folks. Okay, so we see price moving higher right now. John, I'll get to you here in a bit. We're running this low resistance liquidity. High, equal highs here. Minor internal swing high. Let's just note this here. If Powell's speaking at 10, I kind of want to take a trade before 10. My personal preference. I don't know if it's going to happen. We have a breaker right here. It just doesn't look good. Okay, if I'm taking a trade, I think I want to take it to the downside here. I like this sweep of liquidity. If we get displacement back down into the other direction, I think I need to see a close below the first presented fair value gap and potentially a breaker. I might look at taking it down to midnight open. I like that we swept this internal high. But I don't want to get caught up in price running lower and then just moving back higher. That's what I want to avoid. It's very common in conditions like this. So I think what I want to see is the displacement followed by the retracement into a breaker, and then from there this would be our entry. I want to take the retracement entry, not the expansion entry. Expansion entry in certain back and forth high resistance conditions typically will get the retracement following the expansion, and you get stopped out on the retracement, you get stopped out, and then it continues in the direction that you wanted the trade to go. So we want to avoid that as much as we can. All right, I got the green light to trade. 9:45. All right, so John, I'm going to see if I can answer this here. I noticed that you take other trades off stream. John, when you say that, are you referring to while I'm streaming I take it off stream, or after the stream is done I take trades? And then your second question was, I have a question. If you take so many trades throughout the day, how do you risk properly because you take so many trades? It's a great question. So the first question, to answer that second part, you have to have a buffer. Okay? So if I take a trade, now let me qualify this. There are times that I'll take trades throughout my day that are probably improper trades. I'll be honest with you. I get relaxed. The most disciplined I am typically is before my stream, during my stream, and immediately after my stream. But as we get later into the day, I've noticed in my personal journey that I'm not as disciplined. And I think it has to do with being fatigued, being in front of the charts for so long, and I've had to make adjustments with that. So I've put things in place to help mitigate some of that. So with that in mind, when you take multiple trades throughout the day, the question needs to be is, one, is it just an impulsive trade, which I've been guilty of, but I've also had fantastic trades in the PM session. Two, do you have are you within your limit, or excuse me, are you above your threshold for your daily max stop loss? So if you're if you're still green, if you're green or you're break even on the day, or you've taken trades but they're break even, they got stopped out, or they're small losses or small wins, well, you should be able to take another trade. That's just how I view it. I don't know if that answers your question, John. All right, let's go ahead and do our daily affirmation. Let's hit the like button. Once we hit 270 likes, we'll go ahead and do our daily affirmation. This is a good one. This one is about your actions, okay? This one's about your actions here today. Rainer, good morning. I don't know if I was that clear, Johnny. I feel like that could have been interpreted as beating around the bush. I don't think I was, but I could see how it'd be viewed that way. I'm not really trying to beat around any bush. All right, so first presented fair value gap. Watching that. What I want to be careful about is it closing and immediately going the other direction, because that's the kind of conditions we're currently in. And we're already trending this way. I don't want to get caught up in the manipulation to continue higher. That's what I'm watching out for. It means that if we get super clean and aggressive price action, we could miss it. Because what I'm going to look for is something like this. There's the close right there. You could also take the retracement back into this breaker right here. I don't mind that either, to be honest with you. I think I'm going to take that. Yeah. I'm going to take a stab at this right here. It meets my criteria: buy side liquidity, inversion, breaker. Let's look at the 5 minute here. We still don't have a close on here. We also don't have any 5 minute fair value gaps. Do we got one on the 15 minute? Nothing here either. Okay, I give this, I'm not a big fan. I think I might have gotten in a little early. I'm not a big fan, but we're going to let it play out. Once we hit this swing low here, we should move our stop to break even. Okay, so stop needs to be moved to break even just to protect our account with the volatility. I'm sorry, there's my trade. We're going to move this a little lower to see if it wants to expand here. I got the equal lows at 22,258. That's what we'll put our target. See if it gives it to us without retracing. There's a high probability that we come up and hit this stop. Okay.
Order canceled.
There it is. That's why we move our stop to break even. We could give it more breathing room, but with it being a high resistance, the question that I don't have an answer to is, do we reach back all the way up here? Do we do this, one of these? Right? And I want to avoid that. And I'll take multiple break-even trades to protect my account. Okay, so that was a break-even trade. So Johnny, I'm not saying everything that I'm doing in the trade, but I've talked out what my idea was and what my plan was the whole time. I've mentioned multiple times we ran buy side liquidity. I mentioned multiple times the first presented fair value gap if we close below. I mentioned this breaker. So if you don't know what this breaker is that I'm highlighting, you don't know the direction I'm trading. But this breaker tells you where I'm going. When I said I like it came up and tapped this breaker, this is a classification of a bearish breaker. Okay? If you don't know that, then you're not going to know the direction of the trade I'm going and you have no business taking the trade. But if you know that I'm calling this a breaker and you know that it's a bearish breaker, then you know that I was waiting and I like the idea of it coming up and hitting this breaker bar and then continuing lower. But you're not going to know that if you don't know the classification and understand what breakers are doing. So those that, I'm not saying that's what you're doing. I don't know, but I'm saying in general, a lot of people will come on streams and they're like, oh, what direction are you going? Okay, I'm getting in the trade. I'm not going to say, all right, guys, when it hits this level, I'm going to go short. I'm going to set my targets for here. I'm going to set my stop losses for here. I talk about all of those details in the academy. I talk about how to do all that. And when it's appropriate, I'll talk about that on stream as well. But I'm reading order flow. And for those that can follow along, they know exactly the direction I'm going. At least I hope so. Everybody in here should be. Matthew, correct. Thank you. This is not a signal service. It's more of a learn to read price action and follow along in reading the order flow live stream. I like price respecting this first presented fair value gap. But look how since we ran this low, we moved our stop to break even, and look how we've consolidated. This is an example of why I'm okay with being stopped out. I don't want to be in a trade where we're consolidating and then potentially turning the other direction. Now, could we continue lower? Absolutely. But that's my model to protect my accounts, is that when we grab this liquidity, I'm looking for the aggressive continuation, not for the back in here potentially running for this fair value gap. This fair value gap right here is the primary reason why I moved my stop to break even, knowing that we are in high resistance. What is high resistance? A lot of wicks, a lot of overlapping candles, not very many fair value gaps. And because of that, I'm concerned that we might erase these fair value gaps by moving back up into them and then continuing lower. There it is right there. That's an example. This is what I'm referring to. Is it will come back up and rebalance these areas during high resistance and then continue. I really like that though. Look at that signature and price of respecting that first presented fair value gap. We'll see if this one doesn't. We haven't quite reached this fair value gap here, so maybe it wants to continue back up here, but maybe it doesn't. We've got 3 minutes till 10 o'clock, so probably best to stay out anyway. TradingView, John, yes. Carlos, that is an issue that I would say every trader has to work through. So you're not the only one. I am. This is September. This is NQU. NQU is September. I haven't even been watching ES. Let's see. Here's the candle that just closed below. It's too low already. We never hit the breaker. It's just as sloppy as NQ, to be honest. I do like how we swept buy side liquidity. This is why I think this is the main reason why I'm looking for shorts, is because we swept that buy side liquidity. Probably we're going to get a nice move right around 10 o'clock. I just don't know if I don't want to take it with that being news. Come on, folks. I need 19 more likes, and we're going to do our daily affirmation. 19 more. Hit the like button for me. All right, let's see what happens. Was it a good decision to stay out? Do you see the flashing on that black screen right there? It's like black, white, or white, green, white, green, 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 white, white, white. What the heck? News. Luna or Lunwara. And I mean, honestly, guys, look at the chart. It looks nasty. Yeah, there's nothing on ES though right now that I really like. Yeah, it did run sell side, but it's not looking pretty. Yes, Benjamin. Retag to the first presented fair value gap. I'm kind of watching this fair value gap up here, to be honest. I wouldn't mind it wicking into this and the body respecting the breaker. I don't want to chase anything. Here's an inversion to the downside. I'd rather play into a retracement. This is playing the expansion. When the market's high resistance like this and we get a lot of back and forth, inversions are not your friend. Inversions will be trying to do a on-screen trade, get you some cash. There we go. We hit 70. Alrighty, my friends. So the good news is, in regards to my live streams, is they're currently putting in fiber in my neighborhood. They started about a month ago. Here's the thing, guys. It is about showing up every single day. June 24th. I honor God by showing up, faithful with the little, so that you can be trusted with the more. I multiply what He gave me. We need to be faithful with what is in our hands, folks. Okay? What is in your hands right now? Maybe it's that one eval account. Maybe it's $50. Maybe it's $120. Now, if you take a loss, does that mean you're not being faithful? No, that's not what it means. You can still have mistakes and still be faithful with it. You can still be learning and still be faithful with it. But are you cultivating yourself to learn? Are you applying yourself to the charts? Are you journaling? Are you reviewing the mistakes that you do make so that you don't make them again? Are you being a diligent steward of what the Lord has placed in your hands? That is what this is about. We swept a little buy-side liquidity and tagged this breaker. Now I want to see if it wants to roll over. If we get aggressive price action right here, this inversion admittedly looks good, despite what I said earlier, not wanting to take inversions. Do you see how this inversion failed? Actually, no, it didn't, because there's a volume imbalance right here. I'm not going to take it because I don't want to. If I'm going to take a trade, it needs to be on the retracement, not following the retracement for the expansion. It's these markets it's these conditions that you have to be so convinced that this is the direction that when you see it going this way, you take the trade. And you expect that it's going to find resistance where you took it. So I'm still keeping an eye on this fair value gap. That's not bad though. If we get back up to this breaker again, I might actually consider taking it. Because it's only 10 handles, 15 handles. So actually it doesn't look bad, folks. It doesn't look bad. All right. I think I'm trying to decide how much risk I want to do. We're going to go 2 micros. All right, we tapped the breaker again. I'm going to go that level. I'm going to move my stop to break even. Nice little flash. Let's see if we can get a follow through with this. All right, stops at break even. I think I'm going to close one contract here. I don't know if I want to let it. Nah, we're going to let this play out. I'm sorry, let me scoot that over so you can see a better view of it. Oh, don't retrace it all here, folks. Come on. Yola, thank you. Oh, come on. See how there's just no follow through on days like this? I'm gonna cover my fees. I'm gonna put my stop. I think I'm gonna move my stop from break even and give it a little more room. I'm okay taking a 4-handle stop for that to give it, just to make sure we're not wicking into these areas. I don't want to get stopped out and it run in my favor. So I'm willing to increase my risk for the sake of giving it room to breathe. Because I think we're going the right direction. We're just in a high resistant market, so price comes back a lot. So I'm gonna continue to let it breathe and really work on my internals of being comfortable, being uncomfortable. I don't like the feeling of leaving risk on the table, right? It has that feeling, right? So that's something I have to learn to sit in longer. And if it stops me out, you accept it. So I would have been stopped out right there. Let's see if moving my stop helps me, or maybe it doesn't. We'll see. I can see this pushing right through this. We'll accept it. We'll accept a loss either way.
Order canceled.
All right, stopped out. Remember this fair value gap that I've been mentioning? Let's see what happens here. So right now we're in premium. If we take this inversion after hitting this, I'm watching to see if we're gonna respect this breaker for continuation higher. If we don't, then we can look for a re-entry towards the downside. If I'm honest with you, I really like the 935 fair value gap better. For a first presented fair value gap on ES. The 931 is a BPR. This one was a breakaway. So I think I like this level better. You can see it respecting that fair value gap significantly more than the other one. Wick, 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 wick. So I think I like that first presented fair value gap better. On NQ, there just really isn't anything. Take a beat. Glad you like it. This is courtesy of Lowly FM. Find his channel, subscribe, listen to his music. He's given us permission to listen to it here. Does everybody understand why I took this trade short right here? It's the only thing that's looked decent. Respect, respect, respect. And I'm like, okay, I'm going to take the short. And we got the reaction. We just saw zero follow through. So, is what it is. You can't feel bad on a loss like that. We call that a negative winner. Technically, this breaker bar is still in play. This breaker is still in play. You could even do to the wick high and the wick low. Yes, correct. Remarkable. It's just not, it's not my favorite. So I don't like when I see the breaker find support here and then it break above it and then find resistance here. I'm not going to be as quick to take this trade. 3 minutes till 9:30. We'll see what kind of manipulation we get at 9:30. BC, genuine question. How do you justify charging people to learn how to trade concepts that you aren't sure work without a track record of consistent profitability? Oh, wait, whoa. Sorry, we got some reaction going on here. Look at that. And all that fun, and then it just retraces it all. This is why we're sitting. More than likely, we're going to sit for another 20 minutes. So first off, BC, if you don't mind me asking, I'm happy to answer your question. But I'm going to ask you a question. And the question is, how long have you been trading? And how long have you stuck with a specific, I guess, strategy? And I hear the genuine question that you have, and I want to answer that, but I would like you to answer that question before I do. So 4 years total and about 1 year trading ICT concepts, or 1 year on a specific strategy. Did I got that right? Just to make sure I'm understanding. Okay, cool. So the answer is this. It is not about, it's not about the concepts that's the issue. The issue is the mindset in using them. If you've been trading for 4 years, I think you can agree with that. I could have a marginal strategy and somebody could be profitable. What I mean by that is I've seen people with a 30% win rate make lots of money. But what they've managed is their ability to manage their risk appropriately and their emotions superbly. So when I teach these concepts, it's because I see them work consistently. The missing factor in either mistakes I make or trades that I take is predominantly psychology. And I've shared this publicly many times. I've found consistent profitability in covering bills for my family, but I haven't broken through that window to cover all of my family's expenses on it. That's just the truth. I haven't admitted that I have arrived and haven't told everybody else that I've arrived and you should learn everything that I can teach you. I may be 10 steps ahead of you, 5 steps ahead of you. What I teach in the academy is understanding how to read order flow. And you've seen me do that. I don't know how long you've been here. Every day. You guys have seen me call out levels and they turn at those levels on a dime. You've seen me call out levels and then it blows right past them. What's the difference? The difference is between low resistance and high resistance liquidity, and understanding that and being able to recognize that. So I'm learning as much as you are learning. I'm just at a different spot that I believe there's people out there that can glean knowledge and understanding to grow in their journey as a trader. I don't try to fluff anything. I don't try to cover up anything at all. But the concepts speak for themselves when you can see dozens and dozens of traders use these exact concepts and see profitability. I've had huge runs with these concepts. 200-point winners, 100-point winners, decently consistently. Now, since Trump's been in office, that's also played a factor in, for me, what I went through was a dry spell. I went through a drawdown dry spell period, and it all 100% had to do with Trump coming into office. And it was, for me, my first real market shift. Not market structure shift, but we're talking about how the market can change based on what's going on economically. I started and became profitable during Biden, and Biden was pretty lame. I mean, there was no chaos. When Trump came into office, it was erratic, and that changed how priced. There was more manual manipulation. And as a result, I had to learn to adapt. I adapted. It took me a little bit, but I adapted. And that was my first period of having to go through drawdown because of a market change. So there's so many more factors than just the concepts, teaching it if you haven't had perfect consistency, because the truth is most people don't. There's people that have win rates of 30%, yet they're profitable. How is that? Because it's psychology. Psychology is the bulk of what needs to be mastered. Does that answer your question, BC? Does that help? I hear the genuineness in your question, so I'm going to give you a genuine answer. You may not agree, and that's fine. I don't expect everybody to agree with me. It's foolish to think that everybody's going to agree with me. Okay, so see how we're playing inside this breaker longer? I don't like it anymore. So if we came back down here, I would not be looking at this breaker anymore. Totally. And also, BC, if you've been trading for 4 years, you have, I don't want to call it baggage, but you have prior experiences, whether they're positive or negative, that you have to filter everything through. So I get it. I totally get it. You've had people that have probably lied directly to you. You've had people that have tried to take your money. You've probably had people that promised you one thing, but they didn't give it to you at all. I mean, it's just prior experiences, and that's the filter people put everything through. So I get it. I do. I went through I have a different perspective on people giving courses and stuff like that. I think I've bought probably half dozen to a dozen different courses in my trading journey, because you just don't know. You just don't know. You don't know what you're getting into. You don't know the industry you're in. And I was like, you know what? I'm willing to buy A, B, C, D, and D as long as it wasn't absurdly expensive. Gain what I can from that and add it to my overall experience. Yeah, Patrick. I mean, I admire ICT in the form of his concepts, but I'm not a fan of his persona. I know what he does his persona intentionally online, and I'm not a fan of it, but it is what it is. All right, take a look at ES. ES has been respecting the breaker, okay? So if ES is respecting this breaker, I'm still not going to look at this breaker for my entry. I can have two options. I can either go over to ES and play off of the breaker, or I can look for confluences over here to take a trade to the downside. Okay, what I don't like is that ES already ran midnight open. So I don't like that. My draw on liquidity on NQ is, I think, a little clearer. But we're seeing market structure on ES tell me that we could see price move lower. We'll see if it wants to do that. I need confirmation. From a 5-minute perspective, we'd at least, at a minimum, want to see a change in state of delivery, which would be nice. So 5-minute change in state of delivery. That also would give us a 5-minute breaker, high, low, higher high in the form of the bodies. I'm ignoring the wicks right now. Body high, body low, buyer higher high. We break lower. If we come up and tag the change in state of delivery, that would be the breaker bar, the breaker. Also, a immediate retracement, an immediate rebalance, meaning we run lower, close. Now we have an immediate rebalance moving it this direction. That's only if we get a change in state of delivery. And we have another 5 minutes before we would see something like that. So we at least are waiting 5 minutes to see where the candles close. I'm just noting the bodies of the 15-minute have slowly moved higher. Here's an example of bodies moving higher. Here's an example of bodies moving lower. So if you look at that, we honestly could see higher prices. So if we look at higher prices, what are our options? Let's see if we can figure out what our options are if we want to move in the other direction. We have a breaker that we just tagged right there, a bullish breaker. We have the inversion right here. We have another breaker right here. London high is up here. There's just an unwillingness to go lower. We got relatively equal highs on ES as well. I think we're going to push here. Let's see if we can get a retracement back down into this fair value gap in this breaker and see if that's an opportunity for us to go long. I'll be right back, folks. Gonna use the restroom. I love this song, by the way. All right, I'm willing to take one more stab. I'm looking at this 5-minute order block for an entry. No, this is Eric. This is a guy on YouTube. This is his channel. It's called Lowly FM. He's giving me permission to play the music on stream. shows I'm looking for a long. Come on. I'm going to take one micro long right here and average down if it comes lower. I want it to run a little bit lower, but if it's not willing to do that and it wants to expand, at least I'll be a part of it. If not, I only took half size of my reduced risk already, and I'll add to it when we get down into here, into this range. All right, right there.
Order submitted.
I'm low risk today because we're in high resistant markets. I'm reducing my risk to protect myself in case it runs against me because we're in a high resistant condition.
Order submitted.
I added one more on that drop. This will be my final trade for today. Admittedly, that first entry, I shouldn't have taken that first entry. I should have really waited for the drop with the expectation that we're in high resistant markets and we just don't see the quick runs. So that's what I should have done. This first sale is going to give me a 10 handle win because it's going to close the first entry that I had right here. So I have that set at 10 handles. Let's see if we can get pushed through. We're at 11 o'clock. We're in the 11 a.m. macro. So if there's a time for us to break through this right here, it's going to be during this time. And if we don't, then we need to be done trading anyway. Asia is after 8 p.m. to midnight. London is 2 a.m. to 5 a.m. I'm using my initial draw for this trade to be London high. I'm not going to hold it for the whole thing. I'm just using it as my direction. Before I was using midnight open for my low. I'm using this swing high as my liquidity point for grabbing liquidity and seeing if we can get to that point. Institutional order flow entry drill. Let's see if we get an expansion right here. Might be. I'm watching this. I might close this if we inverse this fair value gap. And then I'm going to call it a day. There's just no reason for us to risk more if we're not willing to expand one way or the other and just go back and forth. I like the way this wick is looking, if it can hold it. That's great. I really like that. Oh, don't like that wick. All right, got stopped out. Not sure what that was, other than my sign to be done for the day. The previous candle looked great. We're gonna call it right there, folks. No point in continuing to trade. Be wise, close the account. I haven't hit my max daily loss. I'm just gonna call it. Might as well preserve my capital. So, gonna be done. There'll be better days for trading. Save your capital for those days. I haven't even opened up my personal account. Won't trade my personal account most likely. We'll wait for a better day. So, we'll be back here tomorrow, folks. Thanks for hanging out with me. Wish we had a little bit better scenario on this, but we will be back here tomorrow. God bless. Stay safe, guys. Good trading. We'll see you tomorrow. Bye-bye.
Order submitted. Order submitted.